Welcome back to Chicago Future of Finance. Our last conversation continues our discussion about advisors, growth, finding an edge over the competition here in the great city of Chicago, where we've got a pretty action finish to the closing bell here. A little noisy behind us, 5 minutes left.
Yes.
Sean McGillivray joins us from Kingsview Partners, COO,
Yes,
former
sir.
CEO.
Yes.
Sean, thanks for being here.
Nice to have you.
So you're in Oregon. But I've known Kingsview folks here in Chicago. I know you guys have a big Chicago presence. So tell me about, firstly, where your company breaks down right now.
Absolutely. Kingsview Partners, we're headquartered in Grants Pass, Oregon, Southern Oregon. But our asset management division, where we manage a little more than $3 billion in assets across our SMAs and our ETFs. Those ETFs are listed right here at the CBOE. 7 of them has always been headquartered here in Chicago. Got about 20 folks here in downtown, just 2 blocks down the street.
There you go.
Yeah.
What's the main priority within those different business lines right now? Because what I've seen is if I look at a chart of your AUM, it goes whoop like that, and you're at about $7 billion right now.
We had phenomenal growth. Partner recruitment's been strong. There's a real desire amongst broker-dealer affiliated advisors to unlock fiduciary freedom. They want to look at fee-based. Their clients want to have someone that has their best interests in mind, has a fiduciary background, has level pricing, competitive pricing, and then comprehensive services. So you look at Kingsview Partners today, we've got wealth management services, we have asset management services, we have trust and estate, all under a fiduciary wrapper.
Okay, and bringing that in the very plain language version of the broker-dealer association versus the fiduciary. If I'm a client, if I got money and I want to put it to work, what does that mean for me?
Yeah, think about a major wirehouse, something that's a bank or a brokerage that you know today. Won't say the names, but we all understand where they're at. They're on every corner store or every corner of a major city, or they're in the shopping mall that might be in your local regional market. They're advisors that have been affiliated, captive, have one sell. Maybe they get control on what they have from an independent standpoint.
They're kind of forced to reach into their own basket.
Correct, exactly,
things, right?
Exactly. And so there's been a desire. I'll give credit where credit's due. 2015 unlocked the idea of fiduciary with the DOL coming out with a fiduciary rule. While that never was ultimately implemented, and we had other versions of that ultimately come into effect, the cat was out of the bag. Clients for the first time were like, wait, my financial advisor doesn't have my best interest, or maybe he's not legally obligated to have my best interest in mind. All of a sudden, we had this huge pickup in the fact that RIAs were the thing from day one that started as a fiduciary, ends as a fiduciary.
We had Bob Oros on earlier.
Yep.
Hightower,
Amazing shop
in Chicago.
Yep.
Big. Gave us a great conversation, great details. But you can hear somebody say that when you get that big, it also kind of starts to resemble some of the giant financial institutions. What's your advantage as kind of the more nimble shop?
We're absolutely middle market. You know, every aspiration to get as large as the Hightower, they've done a phenomenal job. And an amazing Chicago-based company, an RIA. This is a huge market, right? You recognize there are 300,000+ financial advisors serving 300 million Americans. 100 million plus of those are investors in the markets that we see every single day. So there's not a shortage of opportunity in what we do. Where we've had just tremendous success is working with the mass affluent, the advisors and the clients, middle America, tier 2 markets, who are often underserved and overpriced.
Underserved and overpriced.
Yep.
When you read about kind of where you're getting other advisors from, you kind of see patterns start to build. How do you get that competition in the edge? When you find somebody that you're interested, how do you say, okay, here's what we got, here's why you come over here, and then you do go back to the well? What is that kind of competition like? Because there's folks that want to do the same thing that you're doing, that want to see that growth once they get to $1 billion, and they go, well, how do I get from bill to 7?
It comes down to efficiencies and scale, right? There are approximately 15,000 or so registered investment advisors in the United States. The vast majority of them are less than $1 billion, and more of them are less than $500 million. Lots of mom and pops, regulation, technology. These things are pushing the mom and pops, the legacy advisors to move into the aggregators, things that look like Hightower, look like Dynasty, look like Focus Financial. We see our opportunity again. An overlooked segment of the market is the mass affluent broker-dealer. The folks that are running essentially fee-based practices in a captive environment, serving middle America, great investors with a great value gap that can be closed, and that can be uniquely served by Kingsview.
Are there particular products or are there particular ideas that when you present them to these clients who are thinking about, who have maybe started to warm up to the idea of moving away from their kind of big long-time advisor, they go, ooh, interesting. Like, what is that kind of
It literally level sets with a fiduciary foundation.
Yeah.
When you can take an advisor who's a CFP, for example, who has fiduciary responsibilities, but maybe can't execute those fully in a broker-dealer environment, be unlocked and be independent from that approach in an RA for the first time, and kind of level set that transaction with that client, it changes the attitude. Now the client goes, all right, everything that is coming out of this advisor's mouth, I know that he and the firm are aligned for my best interest.
Okay.
That's step one. Step two, we've partnered with the CBOE. That's where our exchange traded funds are, the Monarch funds, along with Kingsview Investment Management, our SMA model line. That has been an amazing game changer. 30 plus portfolios designed around the needs of the average investor.
And that's kind of the crux of where I wanted to bring it back to CBOE is how does what's happening here, the options market, the willingness to kind of push it to find edge, to extend beyond just being a benchmarked index kind of approach. What's interesting to you product-wise? What's interesting to you investment and strategy-wise?
We've been real early on. So with the ETFs and the push towards ETFs, if you look at what we've done, we're utilizing index-based, so passive index-based ETFs, but they're custom.
Okay.
They track an index that is represented by our SMA models.
Okay.
And so what you end up getting is an active ETF with the pricing, transparency, and dependability of an index ETF.
Okay.
It's been extraordinarily successful. You can then build out and replicate an index. The index can be something that an advisor and then a client can rely upon as far as evaluating those indexes.
Okay.
But maybe the overall performance data isn't necessarily there yet.
So they don't have to be out there trading individual stocks.
Correct.
On behalf of their clients to say, hey, this is kind of, is it a systematic, quantitative, or is it built for each person?
It's not built for each person. I'm not a big believer in the idea of personalized portfolios.
Okay.
Ultimately, you've got a handful of the best ideas. You want to represent those to as many clients as you could possibly get. They don't need these individual slices of this. They need your best ideas appropriately applied to their risk tolerance.
Okay.
And you look at the ETF wrapper and you look at the active nature that comes with a custom index and the create redeem mechanism that exists for the tax efficiency, they're they're unbeatable.
Is there, we had Jeff Chang on from Vest earlier. How do you feel about the buffered or target outcome style stuff? Is that more for clients that just don't want to lose, or do you feel that it has an important role?
I think we're still understanding what that role is going to be. These are early days for all the defined outcome, all the buffered products. They have not been truly time tested in a lot of market volatility, and this market and our markets in general have an uncanny ability to find weakness in a product and exploit it. So we don't fully understand what they are going to do in all market conditions. We can look at some past data. There were only a few of them trading around the COVID crash,
right?
But we can start to understand how they could be part of an entire allocation. We, in fact, run a set of portfolios to call the tactical asset management models that include buffered ETFs along with some of our tactical strategies.
Got it. Anything tactical that's particularly strong you want to tease?
Right now, our current strategy, VFGU, which is the Volume Factor Global Unconstrained ETF, is a global allocation utilizing a tactical edge. You can check it out at monarchfunds.com.
Nice. I was yesterday online. I was doing a Twitter Spaces, and I was talking about the international trade because it's still killing it on the year.
It has absolutely killed
all these guys are talking about all the calls they're buying, all the tech stuff. And hey, great, fine, it's working okay. But if you go benchmark the broad world, still doing better. I mean,
the blind squirrel finds a nut once in a while.
Sean, great to meet you. Thanks for being here.
Thank you for having me.
Good conversation. Sean McGillivray joining us from Kingsview Partners. All right, that's it. We heard the bell. It cooled off here. Thanks for tuning in to Chicago Future of Finance. It's a fun show. Great guests. Maybe some of the timing sometimes is a little different than the previous day, but we're making it happen. Thanks for tuning in. I'll see you tomorrow, 2 to 3 p.m. We've got another great slate of folks joining us. Central Time, 1 hour into the close, Tuesday, Wednesday, Thursday. I'm Oliver Rennick. Have a great night.